technology and tools. You would need a few tools to get started on the trading journey. First, there is a platform where you can look at the charts, apply technical indicators, and enter or exit trades. This is the trading or charting or order execution platform. You also need tools to screen or filter the stocks to trade. There are so many stocks out there. How do you identify the ones to trade today? What parameters to consider? The tool involved is a stock screener. And finally, you need a broker who will actually execute your trade. Note that the charting or order execution tool is only taking your order and then submitting it to the broker. The actual execution of the order is managed by the broker, which in turn can work behind the scenes with market makers, exchanges, and ECNs. As a retail trader, you do not directly execute trades on stock exchanges. Your order is routed to exchanges via broker, and the broker would charge a commission for the same. There is a lot happening at the back end, but as an end user of the system, you do not need to bother yourself with details as long as you master the front end. I would not cover those aspects here on how trades are actually executed and how these large institutions work together to ensure liquidity in the market. Curious readers are welcome to explore this topic via online articles or books. Conventional brokers are not that concerned about the speed of trade execution. These brokers are usually used for swing trading or for long-term investing, where we do not need high-speed execution. These brokers will take your order and then work with some intermediary to execute the trade. On the other hand, if you are interested in day trading, where we enter and exit trades in a matter of minutes or seconds, you need a very fast execution broker. These are called direct access brokers, which execute your trade directly via exchanges or ECNs and are very focused on execution speed. Refer to the graphic here, where I have captured a few popular names in the industry for the respective use cases. Order execution and charting platforms, stock screeners, and brokers. I would like to empower you with the right knowledge to be able to choose the right platform for yourself, rather than just recommending one particular tool. I have personally used DAS and TradingView for order execution, Trade Ideas and TradingView for stock screening, and Interactive Brokers as the broker. But this should not be considered as any recommendation, as the choice depends on a number of factors, including the seed capital, country of your tax residency, the volume of trades undertaken, risk capital, the proficiency level you are in your trading journey, and so on. If you are an absolute beginner, you should definitely start with paper trading. That means you are given dummy currency to play with, but you do make trades based on actual price movements. Most of the trading tools have this feature available. Only when you are comfortable with the interface and your strategy is working well, and you are making consistent profits, should you even think of moving to an actual account with real money traded. One major drawback of paper trading is that you are not able to test your emotions, as your real money is not at stake. That would be a major leap when you move from paper trading to real currency. The way to tackle that is to start small. Start with $10 to $20 risk per trade, and slowly move your way up as you get comfortable and are profitable over a given set of trades taken in a week or month or over a longer period. Similar to the movement from paper trading to real money, it's not easy to jump from $20 risk per trade to $2,000 per trade. In theory, it may seem simple that if your strategy is working and you are profitable with $20 risk per trade, you can just keep doing that with a higher risk value and thus higher reward. But in reality, the situation is different because of the emotions involved. We will cover this more in the trading psychology chapter. But once you move to trading with real money, you would need a broker. You can look at the available direct access brokers in your country. I would like you to understand one aspect of commissions, which I learned a bit late, and I could have saved a lot if I had known about this earlier. Brokers usually have two types of commission structures that you can choose from: commission charged per trade and commission charged per stock. For instance, consider this screenshot from Interactive Brokers' website on their commissions. I just started trading with default setting, which was IBKR Pro, fixed. The one on the right in the screenshot here, that charges a minimum of $1 per trade. When I was starting out, my trades were really small, and the dollar risk value was like $10 to $15. I should have changed the setting to IBKR Pro tiered, as it has a lower minimum charge per order. But you must calculate this for yourself, depending upon the trade volume. For example, with the volume that I now trade in, which is much higher than what I started with, fixed is making more sense. Another point to consider is the third-party fees. See the bottom part in the screenshot. Your broker has to settle a number of charges for routing, regulatory costs, clearing fees, etc. You can check your detailed statements to see the split. For charting and order execution, I have personally used DaStrader and TradingView. DaStrader can have a steep learning curve, and it may take a while to get used to it. TradingView is really good and offers everything one needs to get started. It is a robust platform and has a built-in stock screener. Another advantage is that it has a community of users who openly share their trading strategies that you can try for free or can modify to your liking after making a local copy. Here is a screenshot from TradingView. When you select the tab Trading panel, you are given a number of brokers to connect to. Or like I said, if you are starting out, just select paper trading. And if you already have an account with any of the brokers, you can just connect here. Note that if you already have a broker, it is likely that they also have their own trading platform. You could use that as well. For example, the broker Lightspeed provides a trading platform called Lightspeed Trader. TD Ameritrade offers the Thinkorswim platform. Interactive Brokers offers Trader Workstation, TWS. If you choose to go with TradingView, you can start with the free version. Explore it thoroughly, and if you like it, you can move to any of the paid subscriptions available. In recent years, there has been a surge of no-commission brokers like Robinhood, Moomoo, TradeZero. I have not used them extensively. Feel free to check if they serve your needs. There is one more cost that is usually incurred. That is for getting real-time market data. What that means is that, usually, like in TradingView, the regular version will have a delay in getting the market data. In day trading, that is not acceptable. So, you will need to take an upgrade or a top-up in your platform to fetch the real-time data. Here is a screenshot from TradingView. Now, you have the trading platform and the broker. You also have the real-time data coming through. But if I want to trade now, how do I decide what stock to trade? Here come the stock scanners. The one provided by TradingView is good to start with. Even Finviz has a good free version to filter based on daily charts. But for the last few years, I have upgraded to Trade Ideas, which offers a lot more flexibility to define my own rules and combination of elements without coding. Stock Screener lets you define certain filters or triggers based on which it brings up a list of stocks that satisfy the criteria at that given point in time. See screenshot here from TradingView. You can select a number of filters across descriptive, technical, and financial indicators. See the screenshot here from Trade Ideas Scanner. The example here is a very simplistic one, but Trade Ideas can help you create more complex and customized rules for screening. There is one other thing that I would like to leave you with before we move to next chapter. When you open an account with a broker and deposit, say $40,000, your buying power will be a multiple of that. Usually, it's in the range of 3 to 6 times. So, even though you only have $40,000 in account, you can use up to $120,000 for trading. This is assuming a 3x multiple. This is called margin or leverage. While it gives you additional funds to play with, you must be responsible and disciplined. Negligent trading can lead to significant losses that the broker will deduct from your main account.